Yeah, Morgan, I think that the point that Barbara was making to start off about being selective about the companies that you want to own tied in with earnings season tells this story, right? Netflix is one of those that ironically has become a bit of a defensive play right now in an environment where consumer spending has definitely changed, right? Where consumers aren't necessarily spending on bigger ticket items and maybe not traveling so much. What they are willing to still continue to pay for is that home entertainment, and probably adding more subscribers in this quarter, in the next couple, as we are concerned about a recession. Netflix is probably going to be one of the bigger winners in that space. And so I think that the report right here just showed the strength of that name, even though you would assume the consumer would be pulling back on subscription services in the entertainment space.
Yeah, we don't even have those subscription numbers, Barb. This is the first quarter where they're not reporting those anymore. But the strength of the results they have put up here, does this reinforce this notion that Netflix is defensive in this environment?
Yeah, I think so. I think Malcolm is dead right on that, because the recessionary capabilities of this have to do with, one, the quality of their content. You see that ever increasing, and plus when they're introducing these special live sporting events. And the key now, since we can't know the subscriber numbers, is really user engagement. And hopefully they'll be talking about that on the call. And the recent numbers in terms are about 2 hours on average, the average subscriber, and they've got a 302 million base of subscribers, are spending per day on watching Netflix. So we'll be watching that, and plus advertising is really just beginning to scale up, and they expect it to double this year. We want to hear a lot more about that. In fact, the last time we had subscription numbers, which was their blowout quarter, in this last quarter, you saw 55% of new subscriptions were in the ad-supported tier. And that's important because in the fourth quarter, when they were up 19 million in subscriptions, that was almost half the total year. So I think that momentum is likely to continue. And plus, international is a big growth area for them, with 30% of their streaming titles in non-English. So there's a lot of growth drivers ahead for this company.
So, Malcolm, how does this set the stage, if it does, for other mega cap tech? I mean, I always sort of think of it as it's a little bit in its own bucket. Is that the right way to think about it now, given the current environment, or does it actually portend potentially good things ahead here as earnings season continues?
Well, I think whether it's true or not that the worst is actually behind us, the way we started this conversation, what is likely true is that tech has taken their medicine, or at least the majority of what they're going to take, right? So if we're talking about another 2%, 5% down from here versus potentially recovering all of the 20+% in all of those individual Mag 7 and the rest of mega cap tech that you're talking about, I think that it's a good place for investors to be picking up some names like Amazon, I heard mentioned initially, that have been unloved coming into this slide starting in February, but also have given a lot back in that same time. I think that names that you've had on your list that you've wished that you've owned for quite some time that aren't performing the way that Netflix is, for example, being a positive one year to date versus some of the others in the tech space. This is a great time to be buying those names on the assumption that the worst, as we said, is behind us at this point.